Robert, we're seeing the first estimates for real GDP for first quarter, and you say it was not as soft as it could have been. What did you mean by that?
Yeah, Susan, came in at 2.3% real growth rate for the first quarter. Estimates were down to about 1.5. We had 1.6, and so there was some concern here that we'd get a pretty bad print on this. And even though the fundamentals, in my view, are still good, a really soft headline print can ding confidence, and that was a concern. I think, I feel good that we've dodged a bullet. We've got something above 2%. And I think we're going to see some more growth in the second and third quarter. So I don't view this as a fundamental slowdown of the U.S. economy. It's just the way some of the quirky components of GDP lined up in the first quarter. And I think we can get past this and continue to have a pretty good economic performance for this year.
We've also seen increases in wages. Wages and salaries increased by 0.9% through the quarter, and we're up 2.7% over the past 4 quarters. So what does that mean for the overall economy?
Yes. The employment cost index for the first quarter came out today, and normally I'd call that a tier 2 number. We don't really generate the headlines off of that number, but the reason why it's important is the Federal Reserve is looking at wage growth with an eye on inflation. Higher wages cause companies to raise their prices, which contribute to inflation. So the employment cost index is total compensation, wages plus benefits and all that, and we're seeing that warm up. And that is going to reinforce expectations that the Federal Reserve will continue to show gradual rate hikes this year, at least 3 total for the year. We've had 1 already in March, and then June and September. And the odds of the 4th rate hike, which may come in December, about 35%, or 1 out of 3 roughly. I think those might start to tick up a little bit as we go through the year. So, that's why this is an important number.
Robert, let's move on to housing sales. What do the numbers look like for March?
Yeah, we saw both existing and new home sales ticking up. We saw prices coming in firm. And if you look at the inventories, we did a little extra research on this and looked at total inventories of both existing and new home sales and compared that to the overall number of households out there, estimates of households. And that ratio is very, very low, meaning that if you're a prospective home buyer, you're just having trouble finding houses to look at. Because there just aren't that many being sold. And so that tells me that we're going to see ongoing pressure on prices this year because inventories are very tight. And maybe existing home sales, I don't expect to move up that quickly. Probably we'll see the push will be on new home sales because markets are really tight, and that positive rate of change of housing stock has to come from new home sales. So that's favorable for home construction and new home sales this year.